Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We're coming to you from the CNBC TV18 Motorola Oswal newsroom, and this actually is the newsroom. I'm Prashant. With me, as always, my colleague Sonia and Nigel. Guys, hi. Good morning.
Good morning and happy 25th. It's CNBC TV18's 25th year. So happy birthday to all of us.
Happy birthday, guys. And, I just want to say very quickly, it's been 25 years of trust and timeliness. And I think these are the two things which make the market tick. So thank you, viewers, for staying with us these 2.5 decades as we've taken you through the ups and downs of markets. And guys, what a way to kind of bring in these 25 years, right? With the kind of market we've had over the last, 10 days or so.
Absolutely. You know, I just think, first of all, of course, I want to wish all our viewers a very, very happy 25th birthday, because without our viewers, we are no one, right? So it is because of our viewers. We have tried to, over the last 25 years, stay credible, stay loyal to our viewers, and more importantly, stay relevant, right, in today's day and age. And it's not just us. Three of us are just the face of what you see. Absolutely. It's an entire machinery at work. All the producers, the directors, the technicians, the guest team, the research analysts working tirelessly day after day to put credible content in front of you. It's not easy, but it's a job that's got to be done, and the best in the business is doing it. So happy 25th to all of us, and more importantly, to the team that makes it work.
Well, you have said enough. Party time, guys. Party time. It's our birthday. Very, very excited today. And as you all said, no, we are here because of you all, and you all have made us. So thank you for staying loyal to us. And thanks, guys. Every morning we wake up to each other, right? It's great anchoring with both of you all as well, and the entire team that backs us up. And for me, this day is always special. It's my mum's birthday. It's my channel's birthday.
So
I'm extremely excited today.
It's double dhamaka.
It's double celebration. Triple, yeah.
And I've been here for more than half the journey. So very, very special moment for all of us, for all our viewers, and we thank you.
Wish you a happy birthday, Nigel.
I've been doing it for the last 13 years, so happy birthday, Mom.
Happy birthday, Auntie. It is a big day for all of us. But you know what? I do want to also take this opportunity to thank everyone here, even our viewers, right? Because we learn from them every single day. And in today's day and age of the digital landscape, you get so much feedback from your viewers as well, and that's how we are sort of evolving across, media platforms.
It keeps us on our toes,
it
doesn't
does.
Every single day, and it's instant. So actually, it's actually sort of a great day, and we'll continue to get you snippets of the journey over the last 25 years. You'll get to see a lot of the team as well. What Sonia was talking about, the back-end team, which puts this program and other programs through the course of the day together. So we'll do that. But we've got a market to track, so let's kick this off in terms of, what you need to know. We're waking up to not so kind of global cues. Let's just, start with where we left off yesterday. We've had an incredible run. And how incredible? 1,000 points worth over the last 6 days on the Nifty is what we had. And that's what I was saying. What a way to kind of bring in this these 25 years. So we closed on the Nifty decisively above the 20,850 level. Actually, the first close above the 20,850 level happened day before yesterday, but it was just about 5 or 6 points. Yesterday was much more decisive with about a 0.5% gain, which came through, once again. So, the FII positioning in the derivatives market, which something we've highlighted all the way since Monday when we began. And by the way, we came into this week with FII's net short, some 47, almost 50,000 contracts on the index futures. Yesterday, it was next to nothing. Today, FIIs actually are long, 23,000 contracts long on index futures. And the reason this is important to track is, as the market has done very well over the last 3 days, and actually, even going into these election results, so the total is about 6 days worth, 1,000-point rally. The comfort or the cushion which comes from short positioning, that kind of is gone now. FIIs are long, 23,000 contracts, but it's nowhere near exuberant kind of levels. All right, let's rewind the clock back. Overnight cues, not very much to talk about. Nasdaq was down about 0.6%. The S&P lost a little bit. You got the 10-year, which lost about 5 basis points. And you have the dollar index, which is above 104. It's been, not really decisive one way or the other for the last 2 or 3 days. And the market here has kind of moved to its own tune, to its own beat. Oil prices had a significant move. They were down about 4%, but in terms of a driver for this 4% sell-off in oil, not really. It looks like general risk reduction, which played out and showed up in oil as a commodity as well. I said this yesterday morning, same time. Maybe things at the margin in the very near term are getting a little stretched. So the daily RSI, for example, which is the relative strength index, a simple way to look at sentiment, that's at about 84. So we are, technically speaking, a little overbought. If you look at hourly sort of indicators, technical indicators, it looks like momentum is starting to fade a little bit. You got hints of that yesterday. I mean, the market was not able to kind of rip through like what we've had the previous couple of days now. So that is point number 2. But I would say this as well, there is no clear sign of a significant price reversal yet. You need to get that. And how will you know if you're getting these price reversals? You've got to look at levels. So on the way down, the Nifty has got near-term supports at 20,795 and then 20,545. These are basically the 20 and the 40 hourly moving averages. I think once you get a close below the 40 hour, which is about 25.45, then I mean you will think about maybe a pullback which may last beyond a couple of days. Otherwise, right now, dips will be bought. Dips to 2,700, dips to 2,500 most definitely will be bought. Bank Nifty had a bit of a divergence. It closed in the negative yesterday, so that needs more watching. Before this rally started, the Nifty Bank was the weaker of the two indices. So here, supports for the index come in at 46,674 and then 45,875. Again, these are very near-term hourly averages that we're looking at. And on the upside, I would still say on the Nifty Bank, a move to 47,700 is pending. But will that happen before, in a breathless kind of fashion, the market we've had, or will it happen after a bit of a pause? I would say that after the rally that we've had, wait. You will get pullbacks. Maybe it'll just be a day's worth or 2 days worth. But the risk reward right now with the rally that you've had in the very near term, and especially if you're trading, perhaps has turned a bit more unfavorable. Sonia.
Absolutely. I mean, there's nothing to complain, right? In this market, some consolidation is always a good thing. And I think as we've been saying before, when it rains, it pours, and it's pouring good news for the market. The additional good news that we have this morning is crude, and I'd like to pull that up. I mean, I think 5th day running crude has been falling now. It's now below $75 a barrel. It's a big positive, and this is ahead of the RBI policy. So that's another thing that the bulls will latch on to, the fall that we've seen in crude prices. So that's a positive. But the US markets, they ended with mild cuts overnight. In fact, it's been the 3rd losing day for the US markets. So in that context, won't be surprised to see some sort of consolidation in the market in the next couple of days. Let's not forget the Nifty is up 4% in just 5 trading sessions. That's been the kind of rally that this market has seen over the last many days. And perhaps the Nifty could consolidate around the 21,000 mark. But what's important is that the bottom of this market has moved up. Now, the floor for this market has now moved up to around that 19,000 level, and that's an important thing to keep in mind. Domestic institutions bought about 1,400 crores in the cash markets. FIs continue to buy. In fact, FIs have bought almost 9,000 crores in the cash markets this month so far, and we're not even in the, the 10 days in the month, not over just yet. So big buying from FIIs. Now, tomorrow you have the RBI policy, and that's the next big trigger for the market. Maybe not in this policy, but the market is now bracing itself for possible rate cuts, both from the US Fed as well as from the RBI. The expectation is that it will happen in the first half of 2024. So that's going to be the next big trigger for the market. But for now, the Nifty could consolidate around that 21,000 mark. There is a pre-election rally that the street is looking at. So when this consolidation ends, that pre-election rally is something that could take place, perhaps take the markets to 22,000 as well. Time will tell. And there's a lot of value that's still left in large cap stocks. So let's not forget Reliance, HDFC Bank, Infosys, HUL, ITC are all still 10-15% away from lifetime highs. So perhaps there's better opportunities in large caps compared to mid caps.
Well, that's right. Now, guys, what a rally we have seen, right?
Yeah.
7 straight sessions, you end higher. That's telling you the kind of rally that we've seen on the markets itself. And for me, there are 2 big triggers from here on. Yes, the retail participation is good, and all of us have been putting in money, via the SIP route as well. And that's very encouraging. But for the markets to move up from here, you require the hot money, the FI money, the institutional money needs to come in there. And also the Nifty Bank, that will have to perform from here on. Maybe both those 2 points, they're actually interrelated with each other because the FIs have to come in. Remember, the exposure in India, close to around 32-33% is towards, banks. So both those 2 could be interrelated. Now, the FIs, they're net long on the index. So that's going to be very, very important. And just take a look at the chart on your screen. they are net long for the first time since the 22nd of September. So that's the kind of short covering that we have seen. We have a swing factor out there of close to around 2 lakh contracts. From being a negative, 1.75 lakh contracts on the short side, now you're going with a net long position of more than 20,000 contracts. So big swing factor has already taken place. Bulk of that short covering has taken place. Now all eyes are on the institutional buying. Two strikes were very active yesterday, 20,900 put as well as the 20,950 call. And just plugging in both those two numbers, you get your levels out there. So the near-term support level for the Nifty will be yesterday's low around 20,850 and plug in the options data. Since the 20,900 put was seeing some writing, plug in close to around 70 rupees on an average, well, you'll get 20,830 odd. That should be the important number. The levels come up for you on the screen in just a bit. Resistance level, since the 20,950 call was very active and the premium ended close to, it was on an average at the start of the session close to around 90 rupees. Well, you get that resistance level of around 20,040 odd. The Nifty Bank, that holds the key. It's rallied in the last 10 days or so, but it's an underperformer year to date. So the year to date chart should come up for you. That's still up only around 10%. The Nifty is up close to around 15%. You want the Nifty Bank to do a catch-up of sorts. If that happens, then the Nifty is well and truly on its way to higher levels. But that holds the key. Nifty Bank and the institutional numbers are very, very important because bulk of the short covering has already taken place.
A lot of people on Twitter, etc., have been asking this feedback that you're talking about, that what should we do? Should we book profits? And even, anecdotally, whether there's been such a sharp rally, right?
Yeah.
Truly historic. So what I've been saying is, if you can stay invested, just stay invested. Don't forget about it. You'll get pullbacks along the way, but there's no real reason to get out because the market has moved 5% very quickly. It is quick. It is very quick. Yeah. Of course, if you're trading, then it becomes slightly different. It becomes trickier, and then you've got to take sort of, the day-to-day into account. Yeah,
I think, currently, at current scenario, you're basically building your portfolio for the next 5 to 7 years odd. Because in the, in the next couple of months, anything can happen. In the next, 12 months or so, anything can happen. But when you're buying good quality stocks, for a longer duration, I think it's that phase where you want to participate on the upside. You want the kids to have a great future, so keep the money coming in.
And also the good part, I guess, is that large caps have not participated yet, right? So if you have this FOMO feeling that, oh, the market is at all-time highs, I haven't participated. But guess what? All the large caps have not participated either. So perhaps this is the time when you go out there and put your money to work.
Absolutely. Well, we'll continue to discuss this. We'll get you lots of views. So let me give you a quick teaser of what's coming up here, right? It's our birthday, and we have a very special lineup of guests for all of you through the course of the day. Biggest market voices will join us. James Sullivan of JP Morgan will be with us. S. Narain of ICICI Pru, Samir Arora of Helios, Sridhar Sivaraman, and Nilesh Shah are some of the faces that you will see here over the next 2 hours or so.
All right, that's not all. The Best of India Inc. is also on your channel today. Dinesh Khara of SBI, Rajesh Jejurikar of M&M, R. Shankar Raman of L&T, Shenu Agarwal of Ashok Leyland, Prabha Narsimhan of Colgate Palmolive, Ramesh Swaminathan of Lupin, Viren Shetty of Narayan Health, and Atul Lal of Dixon Technologies.
At 10:30 today, market veteran Ramdev Agarwal will join us as our guest editor on the program, where he will discuss the rise, the fall, and the resurgence of Zomato. Zomato is Ramdev's big bet right now, so stay tuned to CNBC TV18 for an action-packed day.
All right, well, first up, there's so much happening in the next 2.5 hours, so keep it with CNBC TV18. But first up, let's start with the equity view coming in this morning. We have Amit Sachdeva of HSBC, who says that many positives are coming through, from solid earnings to falling US yields, which are driving the view that the bull market will extend into the first half of 2024. However, next year will be different, as the general election will make the market more volatile, and a fractured mandate is a key risk. Banks, healthcare and energy are the sectors that are favorably positioned. We also like autos, retailers, real estate and telecom. Sectors that are unfavorably positioned include FMCG, utilities as well as chemicals.
Well, some views on the rupee as well. This is Parul Mittal Sinha of Standard Chartered Bank, who says that the USD INR continued to trade in a narrow range during the week, despite good equity flows on positive sentiment post-state election results. Lower oil prices, weaker dollar. On the back of these, she expects the pair, the USD INR, to trade between 83.15 to 83.45 to the dollar next week, with markets closely watching US non-farm payrolls data and the MPC outcome here in India, both tomorrow.
Okay, and on the bonds, Parul says that the India rates remained in a very narrow range despite a sharp down move in global rates. She says global rates markets have priced in an aggressive rate cut from the FOMC in 2024. And she also talks about how domestic rate markets continue to be constrained by tight interbank liquidity and large supply of corporate papers. She also adds that the RBI MPC is expected to maintain a status quo on policy rates in the Friday MPC meeting, and the markets will look forward for any pointers on liquidity.
Well, let's run you through the top 10 list, and later on we'll get in further details on that. For the time being, we're just running through the list. We're looking at Network 18, we're looking at TV18, a couple of more stocks, BEL, SpiceJet, their stocks will be reacting to positive news flow. While on the flip side, your Bharti Airtel, Paytm, IDFC First Bank, Ircon International, ONGC and Oil India, all of them will be reacting to negative news flow overnight.